Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Today we want to be talking about a subject that is on a lot of people's minds, and that is, CJ, should I be moving my money somewhere else, maybe to a different vehicle, maybe toward a loan so I can pay that off, instead of having my money shrink, having my money be subject to inflation and it's losing value? Where should I put the money? And that's a great question. We're going to go ahead and get into that. We're going to be showing you by demonstration what you should do, not give you a story, but show you by the numbers what you should do with $5,000, $10,000, $20,000 cash, okay? Whether it's in your IRA, whether it's in your 401k, whether it's in your savings account, wherever it is, where is it best utilized? We want to get into that right now. Before we do, please like, share, and subscribe so that people all around the world can see the power of velocity banking for themselves. Are you ready for this? Let's hop into it. So you've got a loan, and let's just say that it's for $10,000 at 10%, okay? And so what does that equal out to as far as interest? $1,000 annually. Now, that loan may be calculated differently. Remember, we went over the types of loans and how they're calculated, right? Simple interest, compound interest, we got add-on interest. Hey, we're not going that route in this video. We simply want to show you where you should be putting your money so that you could get out of debt faster and increase your cash flow in a more rapid fashion. Now, let's just say you have that minimum monthly payment towards that loan of $200 each month. Now, remember what we're going to do. In any loan that we have, and perhaps you have multiple loans, we're going to put them through our cash flow index model. We got to know the cash flow index number. Why is that? Because we want to see which loan is sucking the most cash flow from us. And so this is the formula for that, okay? We got loan balance divided by the minimum monthly payment, okay? So all you have to do is divide $10,000, that's the loan balance, divided by 200. Now, you know what I like to do. I like to cross out these zeros, and I like to make it look more simple. And so I'm going to do it in my head, 50. So this is right at 50, guys. Right at 50. What did we say 50 was on the cash flow index scale? That's going to be right on the cusp of inefficient loans going towards efficient loans. So this is something that you may want to get rid of quickly, or restructure the loan, or ask for a lower interest rate. I'm telling you, man, when you ask nicely, you'll be surprised what you can get from your bank, what you can get from your credit union. But we're going to side on the side of wisdom, and that is we got to get rid of this loan quickly. And so what does that mean? That means let's utilize our money, let's deploy our capital to fight for us instead of against us. Some of your IRAs, your savings account, your 401ks, your retirement accounts, they're not doing what you thought they would do. So instead of getting discouraged, let's go ahead and take that out, $10,000 out, let's say, all right, of our IRA or our 401k, and then let's just slam this loan. Let's just eliminate it. Why? Because when we do that, we free up $200 each month, not for the bank, but for us. And guess what? We still have more loans, right? We still have more obligations that we need to pay. So we're going to need that cash flow in order to, that's right, increase the debt payoff. You see, the bigger your cash flow, the faster the debt payoff. The bigger the cash flow, the faster the debt payoff. Now that you have deployed your capital from your IRA, your 401k towards this loan, you've gotten rid of this. Also, the credit bureau agencies, they're going to love that, okay, that you paid off your loan in time. And I hope you didn't have a prepayment penalty and all those fees. Please read the fine print, right? Because those fees, okay, the terms and conditions, the small print or the big print giveth, but the small print taketh away. So make sure you're reading that, okay? There's a lot of loans that don't have any of those prepayment penalties, so you're actually better off in making sure you pay that off in less than the 5 years than they wanted you to, okay? We don't want to stay in this for 5 years. It's cash flow stuff. Why would you allow yourself to get it plugged into anything that is going to suck your cash flow in a massive fashion for 5 years, 6 years, 7 years? Let's do this instead. And so we took the money that wasn't doing anything, as a recap, the $10,000 in our 401k and our IRA, and now it's doing something, okay? Now this $200 a month is ours. We are increasing in cash flow. So let's go ahead and see what else we can do with this increase in cash flow. All right, and so remember, we have more obligations, don't we? But we've got a line of credit this time that the banks want us to pay this off in 4 years, which if we stay to this minimum monthly payment, that is about right. And they would stack up hugely in interest, okay? But we don't want to play the bank's game. We don't want to be on their plan. We want a better plan, okay? Right now, your cash flow, let's say, is at $1,200, okay? $1,200 is not bad. You can do a lot with $1,200. However, remember, you just paid off your $10,000 loan. So now your cash flow is at plus 200, okay? And oh, by the way, if you wanted to go ahead and use your line of credit as your new checking account, guess where this cash flow goes? Right there to you. So you don't have to worry about a minimum monthly payment when you're using your line of credit as your new checking account. You get paid inside of your checking account $5,000. Guess where that $5,000 go? Right there to the balance of $12,000, shrinking it to $7,000. And oh, by the way, plus $3,000 because we have expenses, but it's still lower than $12,000 because then it'll be $10,000. All right. All this plus we have total of $2,000 lying inside of the line of credit. So that's what's going to be paying it down, folks. That's why we don't have to worry about a minimum monthly payment. All this was possible because we took our do nothing $10,000 from our IRA, our 401k, and we eliminated our loan. Now that's a huge plus because now the lenders are like, hey, this guy, this girl pays off their loans. And what happens when you get news like that for a business? Are they going to want to lend you even more? Are they going to up your credit score? Are they going to love you coming, right? They're going to love to see you coming, man. They really are. And so what we want you to do is we want you to be a victim of a credit line increase. We want you to be a victim of increased credit scores, because many times when the credit score increases, what happens to the interest rates? They decrease. And so this is what happens when you're using money that's not doing anything. We got to make sure that our money is moving and moving in the right direction, which means your money is moving towards you, not to them. I hate to be the us versus them guy, right? And I'm not necessarily, because we are still using their tools for our benefit, but we also need to make sure that we are looking out for our own, looking out for our families, for our communities, and that we are making the interest work for us instead of against us. Hey, can't we all get along? The answer is yes. And so by the numbers, you should be able to realize if this is correct, if this is right for you or not. If your IRA is doing 20% annually, 25%, 30% annually, that's great. You're a trader, that's awesome. Listen, that's great. TRADER. Yeah, some people are traders and they know how to do it very good, all right? But if you're not, and you want to go ahead and use that money that you've been given and you want to multiply it, you want to make sure that this cash flow is increased so that more of your debts are paid off. And now you are able, right? Now that all those debts are paid off, now you're able to go in debt for assets instead of going in debt for consumer materials. So listen, folks, I hope that answered some questions that you had, and that you were able to do the calculations so that you could see for yourself if this is something you would rather do, or if you want to just play the long game and hope everything works out all right. There's no judgment here. We just want your money working for you instead of against you. God bless you. If you have any questions, of course, this is not the only model, right? Of course, this is not the only way. We have a system that has infinity ways of paying lines and loans off very quickly, all right? It tells you when and how much through suggested strategic transfers. Okay, it's going to be beautiful when I show you that. So if you need help, if you need your own debt elimination plan, just let me know and we'll go ahead and help you out there. All right, God bless, and you guys have a good one.